Hey, good morning, everybody. We're going to continue on. We kind of talked about how to create a budget in the last couple of days. And what I want to focus now on is how to keep track of your money. And this is actually something you may have done earlier on in junior high, maybe even elementary school in regards to this. But we need to go over just some basic accounting terms in order to keep track of our money effectively. And the best way to do that is to talk about how to balance a checkbook. Even though most of us don't even use paper checks anymore, you still have to go through the reconciliation and balancing process, that double ledger entry method, just to make sure that you understand, the most effective way to track money. So part of being able to budget is being able to keep track of your money. In order to do that, you need some basic knowledge of accounting and most particularly balancing accounts. What we mean by balancing accounts is that when you subtract the money you brought in from the money that's gone out and whatever's remaining, it will come out to zero. If you have any other number than zero, then you have an error that you need to go through and try to reconcile and correct. So though the principle remains the same across all types of accounts, like I said, perhaps the easiest example to demonstrate it is balancing your checkbook. So as you write checks, make deposits, use your debit card, or make ATM withdrawals, you should be recording these events in a register. And this is an example of what a register looks like at the bottom here. Normally, when you open an account, they'll give you the paper register. You don't necessarily need that. You can use about anything as a check register. So this is what the register would look like there. And you'll notice it has a place for the check number, the date, what the transaction is, for example, Walmart or something like that. Whether it's a debit, you're taking money out, or a credit, you're putting money in, and then you're running balance as you go. So the way in which this is done is each transaction is listed separately with the specific nature of the transaction detailed in the register column titled transaction. So you'll notice here in this case, that we have two transactions. One is a deposit and the other is the March rent payment. So if the transaction was a written check, then you're going to write the check number in the check number column to keep track of if you had to void a check, throw it away because you made a mistake, or you forgot to write one down. Oops, here's check number 670. Now I'm on check number 672. What happened to check number 671? So regardless of what the transaction is, you should also record the date of the transaction in the date column. And so it would look something like this. On March 16th, 2011, we had a deposit, and then we wrote check number 1465 on March 16th as well for our March rent payment. Now, if the transaction was an act where money is added to your account, then this is a credit, or in accounting terms, cash or anything owned to value is an asset. And if the transaction was withdrawing money from your account, then this is a debit, or in accounting terms, anything owed to another is a liability. And these should be recorded under the appropriate columns in the register, either credit or debit. So you'll notice our deposit is a credit. It's money we've added to our account. So we added $1,500. And our March rent payment is money that's come out of our account. So it is a debit of $500. The deposit of $1,500 is an asset. The payment of $500 in rent is a liability. So the far right column is where your balance is tracked. And the balance is merely the total sum of money you have available to you in your account. And when you record a debit, you subtract that amount from your account balance. And when you record a credit, you add that amount to your account balance. And so you can see the deposit, 1,500. Our new balance is 2,400. And obviously that's assuming that we already had $900 in our account. And then our March rent payment was $500. We subtract that from the 1,400, and that gets us, 2,400 minus 500 is 1,900. That gets us. So I misstated the balance earlier for the deposit. So for most accounts, at the end of the month, a statement is sent to you to detail the activity in your account over that month. It's in a lot of cases now, places are going paperless. You can get that emailed to you in a PDF or go on their bank's app or something, pull up your account statement. But they are required by law to at least monthly provide you an account statement. So these can be sent in the mail on paper, and more, like I said, being sent electronically. Upon receiving this statement or at the beginning of the new month, you should compare your register or balance sheet to this statement in a process called reconciliation. You're going to reconcile your account to make sure what the bank has matches what you have. And when you reconcile your account, you're comparing your record keeping against the financial institution's record keeping to ensure neither of you have made a mistake. Sometimes the bank will take out fees, annual fees, maybe a monthly fee, an overdrawn fee, a low balance fee, lots of things that you want to keep track of, because if you're not, then you think you actually have more money than you have. Sometimes banks make mistakes. Maybe they recorded a deposit on the checking account that was one number off of yours because they made a entry error, a clerical error. So you want to be able to keep track of these things to make sure that you're both doing your job. So this is what a bank statement might look like. And you'll notice we've got the First National Bank of Economics here and Phil McDonald, and this is his account activity. You'll notice on March 15th, he had a previous balance of 0. March 16th, he had direct deposit of $1,500. And then he wrote a few checks, took some withdrawals from an ATM, deposited $50. And so you kind of see he had another payroll direct deposit on March 30th. And so you can kind of see what he's done during that month's activity on this register. So the way you reconcile is you start at the last known place that both records agreed. And if you're doing this every month, usually that will be the last day of the previous month. And then you track the credit and debit activity you both have listed on the account from that time period. So what I'm going to do is I'm going to go back to that register, and I'm going to pull out, I'm going to go back to this account statement. I'm going to pull out my register, and I'm just going to start comparing. And then I'm going to put a check mark maybe next to each area that matches, so I don't have to go back and say, okay, did this record this? And then just make sure that everything matches and that I'm not missing anything. Now, if there are any discrepancies where the bank has something that you don't, or you have something that the bank doesn't, first make sure that no account fees or penalties have been withdrawn that you've not listed in your register, and those will be on your statement. Then make sure that all the checks you have listed on your register have cleared the bank. Sometimes I go out to eat, I write a check to the restaurant doesn't make their deposits till Friday, and this was a Monday night. So it might be a few days before the bank even gets that check, and then they have to process it with the bank of the restaurant to make sure that bank has funds in that account to pay for that check, and so on and so forth. So just make sure that all the checks you have listed on your register have cleared the bank, and that you have all of your check numbers accounted for and did not forget to write one down. For any other discrepancies you cannot explain, call your financial institution to clear up what exactly happened. And that's something I've had to do regularly. And so, to get things explained as to why this, why that, not something that's not a daily occurrence, but a couple times a year, I do have to call them just to clear some things up. So it's important that you do this reconciliation at least once a month in order to keep up with how much you have in your account. Because if you go somewhere and say you pull out your debit card, let's say you look at your phone, you're like, oh, how much do I have in my account? Oh, it says $50. So you buy $50 in groceries, and what you forgot was you have that automatic subscription to Netflix. Netflix takes out $15, $16, and then your bank goes, okay, we'll pay this, but we're going to have to charge you an overdraft fee, and they charge you $30. Well, now you have negative $45 in your account. And the bank could go in a couple days, you still have $45 here. If anything else comes in that you weren't expecting, they might not pay it. They may pay it, but either way, they'll still charge you another $30 overdraft fee. And then they might charge you a low balance fee on top of that. They may charge you, lots of other fees, and they could really pile up. So that one $15, $16 payment to Netflix in the end could cost you about $90 and really hurt you. And that's only if you have regular income that's coming in. So if you lose track of what's in your account and write checks over the amount you have available, it can cost you the amount of the check, the $50 at Walmart, a $25 bounce check fee from the business who you wrote the check to, a $25 overdraft fee from the bank per day that you do not have enough funds in your account to cover the check, a $5 maintenance fee from the bank for supporting a negative balance per day. In other words, a $10 check that bounces could cost you $65 for just one day. That's 650% over what you just didn't have in your account because you weren't paying close enough attention. And this is a great story to illustrate that. This was in the December 13th, 2011 Chicago Tribune. It says, Illinois teen learns about bank fees the hard way. Melinda Gonziano hoped to teach teen son about finances and instead got $200 in bank fees. Melinda Gonziano of McCollum Lake, Illinois, wanted to introduce her son to the basics of banking, but he ended up with $229 in fees in 2 weeks with a balance of just $4.85. Gonziano, a 55-year-old mother of 5 children, encouraged her fourth child, Daniel, 18, to set up a savings account in a nearby TCF bank out of convenience due to its location. Gonziano and her son discovered that the bank offered little convenience due to the growing number of bank fees, as first reported by the Chicago Tribune. After he put money into the savings account from his job, Daniel Gonziano's balance eventually fell to $4.85 and was such a small amount, he ignored it. However, TCF sent him a letter on October 12th informing him that it had charged him a $9.95 monthly maintenance fee 6 days earlier because the account had a low balance. That led to an overdrawn account by $5.10, which then led to a $28 a day overdraft fee. The account was 10 cents over the $5 threshold for which the daily fee kicks in. Young Gonziano's account was now overdrawn by $33.10 for just 1 day. Gonziano, who works in the nonprofit sector, and her son went to the bank that weekend to close his account, the Tribune reported, but they first had to pay the accumulated fees, which totaled $229.10 for nothing. I mean, he has done nothing, and now he owes $229.10 because he didn't keep track and reconcile every month. Gonziano, who banks elsewhere, asked for the bank fees to be waived, but the bank would only eliminate one of the $28 daily charges. They would just not cooperate, Gonziano told ABC News. We were trying to teach him the right thing. If he had overdrawn by himself, I would have made him pay the fees, but it wasn't him. She also learned that her older son, who had a balance of $0, would also be charged a monthly fee, so they closed his account too. Daniel Gonziano wanted to fight it by not paying the fees, but we said we have to take care of it and get out, his mother said. She decided to pay the $229.10 in fees for Daniel's account and was told a regional supervisor would call her. After not hearing from TCF by mid-November, Gonziano contacted John Yates, a reporter who writes the What's Your Problem column at the Chicago Tribune. Soon, a TCF representative called Melinda Gonziano and agreed to send her a check for the $229.10. Jason Korstange, a spokesman for the TCF, said the bank recently switched from charging people $35 for every overdraft to $28 per day for up to 14 days when an account has insufficient funds. So you can see how banks make their money. They make their money a lot more through fees than they do through interest anymore. If we had done it by hand, someone probably would have said, oh, it's just 10 cents, let's not worry about it, Korstange told the Chicago Tribune. But we process millions of transactions a day, and there has to be a cutoff number. Korstange said if the Gonzianos had gone to another branch, a different TCF worker might have refunded the overdraft fees when they first visited. TCF told ABC News it had no additional comment. Gonziano said her older son learned banks are not the way they used to be. You have to check them out really well, she said, and I couldn't agree more. Banks are businesses looking to make money too, and you have to do your part to make sure that they're not taking advantage of you in making that money by regularly reconciling your accounts and avoiding all these fees, which could really hurt you. Let's say you get paid $1,000 a month. That's $12,000 a year. You're obviously under the poverty line, and you write a bad check for $150 at the grocery store. Well, now that's $500, with all the fees that you have to pay the next time you're paid. That's half your paycheck then. That could really seriously hurt you financially and your ability to live and provide for a family. So it's very important to stay on top of these things, particularly if you don't have a lot of income or wealth. You need to stay on top of these things and not be taken advantage of. That's all I have today. We'll be back live again on Tuesday. So enjoy your weekend, your time off. And this afternoon, we will get together to go over the Market Watch Journal entries 1 and 2. So until then, I'll see you later.